Hi, this is Doug English with Act Advisors with your February 2023 update. February is one of the months that is often difficult for the stock market, following some of the best months in January and December. Well, this February was a typical one, with the stock market as measured by the S&P decreasing about 2.3% for the month. The bond market also decreasing about 2.5% for the month. Now, what has been disturbing both of the markets is renewed concern that inflation isn't yet under control, and it may take the Fed a little bit longer to get it under control. So the expectation is that they're going to raise interest rates in March, and they may need to raise them again in May before finally pausing and allowing the interest rates from last year to filter through the economy. As we continue down this path of unknown interest rate hikes, you're going to see the market gyrate a lot very much on the news of whether the Fed's going to raise or not, how much they're going to raise, and how long they're going to raise. That is going to continue for some period of time, but it will come to an end. Now, when they do finally stop raising, we look for a nice relief rally to happen in all the markets. So any sell-off that we might see as the market is afraid of the remaining interest rate increases is likely to be an opportunity to buy into the portfolios. Now, as far as the activity that we do within the portfolios, we have the stock and the bond rotation active in your IRA accounts and some of the non-qualified accounts as well. The stock rotation has been in mid-cap stocks. Those are the medium-sized companies. They're very large companies, but medium in the scale of the economy. And they've been doing very well this year, and the stock rotation is going to continue to be exposed to mid-caps. In the bond rotation, we've seen a lot of change month to month. Now, of course, what causes it to change is when we're looking for momentum in different sectors of the bond market. And this month, we're seeing a change into the convertible securities and floating rate bonds. Those are the changes that are going to occur within the bond portion of the rotation in your accounts. So that keeps you up to date with the changes in interest rates and has your money invested in the areas that are receiving the most price momentum, positive price momentum in the markets. Now, as I said earlier, this bouncing back and forth as the market tries to figure out what the Fed is going to do is likely to continue until the Fed finally says, we're going to pause and wait and see how the data comes. So expect there may be more of this. Any significant dips we would view as buying opportunities. And as always, we are here to help. We want to hear from you. If you have any questions or concerns, please call us right away. And thank you very much for your business.